This week on the Art of SBA Lending.
One thing about Fundex, I would say about maybe 50% or more of the credit goes to you.
That's a great call out, because even though my title was officially Chief Credit Officer, if you looked at my day-to-day, I was also Chief Operations Officer.
We all loved you. Everyone loved working with you. You're one of the best leaders I think we all ever worked for.
I brought a lot of the people in to build this shop, and I feel guilty to this day that I feel like I let people down.
Did you know that they were going to sell it?
I once had a boss that told me, if you bring me a problem, you better bring me a solution. Well, the problem is that taking titled vehicles as collateral can be very cumbersome. And the solution is CorpSmart. When you have a loan involving titled vehicles, CorpSmart is there to handle everything, from transferring the registration to taking title to making sure that the sales tax is paid. I've got to be honest, I didn't even realize sales tax was a thing until just a few years ago when my borrower called me from the closing table because he got hit with a $50,000 bill at closing that I didn't account for in my structure. And so in the spirit of solutions, CorpSmart has an offer just for Art of SBA listeners. Now you can quickly and easily request a DMB quote directly from the CorpSmart website so that you can accurately account for all of your closing costs and properly structure your loans up front. Just go to corp-smart.com/Art of SBA. We'll leave a link down below.
So this is obviously the interview everyone's been waiting for. Kirk Beason, SBA Managing Director at Veritex Community Bank. Is that how we
That's
say it?
correct. Veritex Community Bank.
And we obviously used to work together. So I want to start there, because Fundex, one thing about Fundex, and I would say about maybe 50% or more of the credit goes to you. It's the best place we all ever worked. Now, you probably maybe don't. I don't know if you agree or disagree, but everyone under you agrees, right? Culture, the workplace, it all came to an end. You jumped off the ship a little early, but like we all talk about it still. It was like, and it was you and Heidi, and it's just like the culture you built. How did that all come about?
Fundex in general, how did it come about? So working at a bank, which is interesting because I'm back at a bank, but a bank that really was not invested in SBA lending. They were in the business, but they weren't in the business. So this opportunity came up at a conference like MELC. Met a recruiter there that talked to Heidi and I about a great opportunity to start a shop for a non-bank lender.
What an opportunity.
Yeah, it was a phenomenal opportunity.
I'm listening. Yeah, you're like, I'm listening. Tell me more.
I would have never thought I would do something like this because historically I'm a credit guy.
Right. You came in as chief
credit officer.
Okay.
So here's this opportunity that presents itself to take one of the 14 licenses with somebody I deeply respect, and Heidi, and build our own. So it was a phenomenal opportunity that kind of just dropped in our lap.
Amazing. And that was when, like December-ish, 2019?
So November, not that we'll always remember these dates, November 2019.
Yeah. And we'll fast forward through the whole 2020 COVID thing because that story has been told, but obviously that's a complete curveball for you at that time, right? That changes everything.
Absolutely. November 2019, we're brought in to start a 7A national platform. And then we all know what happens in March 2020. And we have to immediately pivot from 7A to PPP. So as a team, you just kind of roll up your sleeves and, well, you can do one of two things. This is not what I signed up for and I'm leaving. Or, no, we've built this team. We've invested time and talent into this. So we're going to pivot to PPP.
That's true. Yeah. You came there under the idea that you were going to do one thing. A few short months later, it's all in on PPP. And that lasted for how long?
Well, I was in PPP for over a year. towards the end of summer 2020 is when we turned Heidi and the sales team back into 7A production. So we basically had two SBA products going on at the same time, PPP and 7A.
I remember that because I came in December that year. So you had that whole first year was already there and had already happened, and I came in, and I mean, it was great when I came in. I was like, the culture is amazing. Everyone talks about the culture. There was something to be said for the way that you and Heidi built that thing, and I loved just the idea of getting in on somewhat of the ground floor of like what I thought was really going to be like the next big thing. So, how did we end up connecting? It's that same recruiter, I think.
I think same recruiter, to remain nameless. So there's no way you're going to get a Ray Drew. So, okay, well, that's fine.
Interesting. He said,
he said,
oh, he was building me up.
That might have been building you up, but so that's fine. We're gonna talk to Ray, and we're gonna tell him our story, and I'm gonna pitch culture, and I'm gonna pitch the foundation, coming in at the ground floor and building something. And if Ray decides he doesn't want to come, hey, that's his decision. We all make decisions that's in our best interest, but I guess we said something or said some things that piqued your interest. And so you came on board, and that's when we really started to take off.
I mean, what a great decision that was for me. I mean, that it was like just the right place at the right time. I mean, I really grew to the next level there, both in my career, my production. So it all worked out really well. I tend to work anywhere that they don't get sick of me after I keep just asking them a lot of questions. So I know we had a lot of interview rounds and stuff like that, which I think is smart. I think you need to make sure it's the right fit on both sides before you come into an institution. Because if it's not going to work for me, it's not going to work for you.
You mentioned that earlier in the session about interviewing the credit officer, the credit team.
Yeah, you were the guy I was.
I thought I might have been the one. Any potential candidate we talk to today, I require them. I don't ask them if they want to talk to the credit officer. I require them to talk to the credit officer because I want them to know, don't believe everything I say. Even as a former credit guy, I think I have a pretty good feel for our credit box, but I'm not the one that has the approval authority. So I require any candidate to talk to our credit officer and run 3 to 5 live deals to make sure that it's a box that they can work within and be successful.
It's so smart. I mean, that's everything, because that's one of the most common reasons it doesn't work out. And when it doesn't work out, it's just messy and it doesn't work. And then they get desperate and they try to push things through. And then they send you this deal and you waste your time because they just want to show you that they got a deal and blah, 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 blah. But let's get back on the Fundex story, because like that was year one. Year two was 2021. So here's another curveball: 90% guarantees, free money, incentives. Every business is up in Florida and Texas,
Right.
which is where we had most of our deals. And that was the year of burnout.
That was a tough year. Not only professionally, but personally. So we're still knee deep in PPP. Now we're knee deep into 7A, and, lack of a better term, shooting fish in a barrel, 90% guarantees. Literally I was working 70, 80 hours a week. And personally, I burned out. You can only do that for so long. And I tried every which way to work less, but I'm very invested in everything I do. So I wanted to be 100% invested in PPP. I wanted to be 100% invested in 7A and building up this program. I wanted to be 100% invested in our people. And I reached the point where I couldn't do it anymore. Or I was going to be in a room with 4 padded walls. So
that's crazy.
It just personally, I had to step off. I had to step off the train.
Do you think has anything to do with like the way, because I feel like you're, as the chief credit officer and also the leader of the whole organization, well, first of all, that in and of itself is 2 different roles. And I guess I'm asking because I see a lot of shops where the chief credit officer is sort of like the clinch pin. Is that a word? And everything's flowing through them: credit pre-screens, credit memos, closing solves, problem loans, et cetera, et cetera, et cetera. Um, is that just like a structural flaw in how we're setting up shops, or was it something unique in your
No, I think
situation?
that's a great call out, because even though my title was officially Chief Credit Officer, if you looked at my day to day, I was also Chief Operations Officer. And in some sense, might have been considered Chief Executive Officer. So, I'm handling multiple roles. So I'm trying to, set up the strategy, try to set up the process, trying to get the right people on the team in the right chairs, and getting the right product, which I guess kind of fits into the credit box. So that can become overwhelming. And then you bring in, we're a new non-bank lender. So Okram obviously wants to make sure that we're doing everything in accordance with the program. Knowing that we do, because we hire people that want to be compliant with the program, but still you're going to make mistakes when you're growing that portfolio at that pace. You're going to make mistakes. And me being a perfectionist, I hate any mistake. So it just, all these things were just coming together, the perfect storm to drive me to where I just needed a break, or
Was
I
it
was
at,
going to break.
was that at the end of that year that you ended up leaving?
It was at the end of 2021? Gosh.
Yeah.
Yeah, it might have been end of 2021 or beginning of 2022.
I was 21, then 22, then 23. I don't know.
Yeah.
Maybe you did one
It
more
might
year.
have, yeah, I might have been one more year. Yeah. I
Yes,
left.
you did one more year.
That's right.
So how'd you do another year?
I don't know. I tell you what, though, in hindsight, when I look back, it was somewhat painful, but at the same time, in my new role, I have learned
a lot.
so much
Learned a lot.
from what we did at Fundex, and we did more right than wrong. But you always have to have a mindset of continuous improvement. Even if
Right.
you work in a really strong shop, if you're not constantly trying to improve your processes, then at some point your shop's going to die.
Which we did, because I felt like going into 23, I think, I was like, wow, we just built this thing up and got through such big growing pains. And I was like, this is like, knock on wood, but like, we're actually going to have a smooth year, I think, next year. And then I think it was around December, like 26th, they're like, Kirk left. And I was like, oh, goody. And we had Nanelle coming in, and she was there to help you. But she ended up replacing you essentially as the credit side. And my first reaction was, we had a good run, it's over now. And we ended up having about 10 people out of a 40-person team leave within that next quarter, like kind of sporadically. And I was to myself, I was like, well, let's just see what happens. And like, are my deals still going to get done? Are we still going to close? Are we still going to provide good customer experiences? And then so Nanelle comes in. Now I've known Nanelle a little bit. I got to meet her a little bit, and we ended up doing well. And she was great to work with, and I ended up staying. And a lot of the people that left were like surprised, I think. But honestly, it was because it was all built around you. I vetted you. I had my guy dig up some dirt on you, and you passed. And so I came, and then when you're gone, it's like, okay, well, that's not what I signed up for. I mean, it must have been hard for you to do that as well, because you probably, the reason you probably stayed as long as you did was because you didn't want to let people down.
Correct. Yeah. No, and even after leaving, I followed the team. I was still talking.
Oh, right. You went with a lot of those folks over.
Right, but what I'm saying is I followed the team that stayed with Fundex. So I stayed in touch. I stayed in touch with some of the team members, and just to make, how are you doing? Things are going well. I was also still a resource behind the scenes. I hope that doesn't violate any non-solicitation, but not anymore. But I was talking to Nanelle about deals and how I would approach that transaction, or how I restructure it. So even though I had left, and I was
Right.
not on the payroll, I had a vested interest in seeing that the team succeed.
We all loved you. Everyone loved working with you. You're one of the best leaders I think we all ever worked for. Because of Heidi, you know, it worked. I mean, she stepped up and was just incredible. Or it, it wouldn't have worked. Then it still stopped after about one more year. And did you know that they were going to sell it?
If you've been a fan of the show for a while, then you know one of my favorite companies to work with is Rapid Business Plans. Last year alone, their business plans helped facilitate over $600 million in government guaranteed lending. They're on track to beat that this year. More and more small business lenders and their borrowers are relying on Rapid to help with the business plan, projections, and assumptions because their team goes the extra mile to ensure everything is done fast and done right. And that helps streamline the process. They're great at export business plans, by the way, which are critically important at protecting that 90% guarantee. Rapid also offers feasibility studies, which tells you if the project is, well, feasible. I would recommend these for any large startup loan because it protects you and it protects the borrower and helps you get more good deals done. Go to rapidbusinessplans.com to set up your Get Acquainted call today. Find out why so many top producing BDOs recommend Rapid to their small business borrowers. We're going to leave a link in the show notes just for our Art of SBA listeners. Now let's get back to the show.
When I left, did I know, or did I just? No, I did not.
I mean, at some point, people knew because they were shopping it around.
Right. I knew it after the fact. You start hearing the rumors in the market. Plus, look, Fundex, maybe it was bad timing. So think about it.
They're with the rates.
They're with the rates.
We built the base of our portfolio at 0 rates, and then all of a sudden they jack it up 525 basis points.
So even if you're in underwriting, in hindsight, it was still prudent underwriting. So you're underwriting with a 300 basis point sensitivity. Who predicts that rates are going to go to 8.5% and 9% on your prime, your base rate, plus a spread? So the ramp up was at the wrong time. So, I hear a lot of criticism out in the market, and it does bother me. And not just the Fundex, but any lender that ramped up production during that time. It wasn't just imprudent lending.
If you were there, it wasn't because, I mean, we underwrote the deals. Right. We looked at them, and trust me, I can for sure say it was, you were doing good deals. But the timing was unfortunate.
And speaking of timing, that was the wrong time to ramp up a shop. Now I'm with Veritex, and when I joined Veritex in August 2023, that was towards the height of the market. So now we're originating
just in time for tariffs,
which we can get into. Yeah. But we've got a portfolio of loans that we inherited that were also underwritten at the same time as the Fundex portfolio, and so those credits are struggling too.
So I want to start wrapping this conversation up, but it's so interesting because, I mean, I was so close to the story, but like you leave, you see basically it fall apart at the end a year later. What is like your reaction to that?
A lot of it's sadness, to see where we started, where we had gone, and where it ended up. Some of it, honestly, is guilt, because I brought a lot of the people in to build this shop, and I feel guilty to this day that I feel like I let people down. I jumped off and let people sink or swim, and that bothers me.
Well, thankfully everyone lands on their feet, and in fact, if you want to break some news here, you can. I mean, this is actually not going to be out for like at least a month. So will it be public by then?
It'll be public. It'll be public by next week.
And go ahead and say it then.
So, of course, I've been with Veritex Community Bank since August 2023, and it's been another build process. But over the last 2.5 years, we've continue to build the team, and we're finishing out the leadership build out effective April 21st next week, and bringing Heidi Whitesell on board as our national sales director, and Nanelle Struska as the, I'll call her the chief credit officer. I guess her official title is senior credit officer. So I'm bringing those two back into the fold, along with, I have a really strong underwriting director, closing director, servicing director. So I'm really excited.
You guys are number 27 in the country as of last night through the fiscal year. You're already exceeding where you left off with Fundex. How are you doing this?
A lot of it's just the same playbook. The same playbook as Fundex is. Yeah, I go into anything, whether, I've been in all different types of lines of business: SBA, home builder finance, commercial real estate. I mean, I like to dumb things down. For me, you probably have heard of the 3 Ps: people, product, process. So when I took the opportunity at at Veritex, I immediately jumped into people, product, process. And so just building the same way, but a lot of it's culture, right? You've got to get the right people in the right positions in the right chairs that have the same values, that it's not just about me. It's not just about the bank. It's about, we have to remember we're in this to serve the small business community. And if we keep things in perspective, and the other thing I learned, work-life balance, not working nearly as much, learn when to turn things off. It's just starting with that. Culture first, process second, product.
Wow. Yeah, the work-life balance is one of the toughest ones. Are you guys selling your paper?
We are selling almost all the paper today, but banks are in a position that they're losing earning assets, and so we are having discussions about holding some of the paper. Obviously, if you sell it, you're getting the income, but there's nothing wrong with holding that loan on your books because you have a nice spread.
You make more in the long run.
You make more in the long run, and you're helping build the asset base for the bank. And we're also doing more 504. Again, that's a balance sheet hold.
And wasn't there something with USDA or a merger or something?
Correct. So North Avenue Capital was
That's a serious player. Those are my boys.
They were a non-bank lender. I think they were the number 1 USDA shop in the country. Veritex bought them probably 3-4 years ago.
Oh, wow.
And just in the last 3 months, you have 2 government guaranteed lending groups. It makes no sense to have 2 government guaranteed lending groups. So the decision, we knew all along we were going to merge into one. Unfortunately, there's one director, one survives, one doesn't. But I have, a great deal of respect for North Avenue Capital's director, but he's landed on his feet like I knew he would. But yes, we've rolled all of government guaranteed lending under one roof, under Veritex.
Wow. Making moves over there. Very exciting. So how are you feeling today with all that going on?
It's very exciting. It's tiring some days, but it's very
careful.
Yes, I know. Careful. I know.
We got a massage over here for Kirk.
It is exciting because the bank has been very invested in the line of business and very supportive. So, a couple of examples. When I joined the bank, underwriting, even though we had dedicated underwriters, it didn't report into my line of business. It reported into the conventional bank's underwriting team. So they had a different idea of how you underwrite SBA credit. And it took a year and a half for me to finally convince the chief credit officer, 1, through Okram reviews, and 2, through internal reviews, to demonstrate, we're not meeting the program requirements. So they let me bring in the line of business, underwriting in the line of business, a little over a year ago.
Oh, and that I'm sure has helped.
It's helped a lot. You still had one missing link. We had a hybrid credit officer, conventional and SBA. He was very supportive of us. I mean, you don't get to number 27 with a credit officer that doesn't support you, but just because of our growth and our scale and where we're going, we've outgrown him. So 3 weeks ago, sitting down with the chief credit officer again at the bank, and he finally said, look, you guys, first, you've earned my respect that you're not here just to run up production, right? Run up a bunch of bad loans on the books, but you now deserve your own credit officer. So man, we hopped on it and went right to it.
It's very hard to get just to operate now within a bank. You start from this situation that doesn't work well for SBA, and you slowly and painfully sometimes have to bring it all together to where it needs to be.
Right.
And that could be painful. That's all about proving yourself, managing up, trying to influence decisions through data and your own, experiences. And it sounds like you've been able to do a lot of that over there.
Right.
I mean, like you said, you don't get to 27 if you're not a serious player. That's top 2% of the country, out of 1,000 plus SBA lenders. So
if I could real quick, just plug for my leadership team. So again, the right people, and being able to attract the right talent. So obviously Heidi's been in the business for 20 years, deep SBA experience. Nanelle, 15 years SBA experience. My underwriting director, I think 14 years of SBA underwriting experience. My closing director, who was also a managing director for a small shop here in Texas, over 25 years. My servicing director, 25 years. So having that bench and having that depth and having that SBA knowledge allows us to do things the right way, but also as we start to train the group coming up, I'm not going to do this forever. Our leadership team is, we're on the latter stages of our career. So we're now able to develop the foundation succession plan.
I'm seeing a lot, and with this consolidation we're seeing in the marketplace, and maybe consolidation is too strong of a word, but you saw big shakeups the last year. It wasn't just Fundex, trust me. There was, in fact, the next week it was like some other place, and we were old news. But what I'm seeing because of that is, and honestly, I'm seeing shops go down. A lot of it is just pure profitability, but you now have these people that were running shops where you have multiple people in one shop who could run a shop, which I think is incredibly powerful, which obviously at your shop, you have multiple people that could and have, run shops. That makes you sort of like more of a superpower. And it's good to be able to bounce ideas off multiple people like that within a shop. So it's not just like one person making all the decisions.
Correct.
What do you see as the biggest sort of challenge or I guess threat to what you've built right now as we're moving into like the rest of the year and next year?
So growth is always a challenge. So anytime you grow that fast, you're going to stress your processes. So that's a risk. People also. So 2 years ago, we had 20 people on the team. We now have 65.
Well, you're doing 504 and USDA with that too, right?
Correct. But you're putting more pressure on your process, but you're also
a lot of people.
That's a lot of people. But culture, remember, I'm a big culture guy. And so the more people you add, I cannot be involved in every hiring decision. I can't be in every department team meeting. So there are days I feel like I'm losing touch with some of the team. So I'm having to be intentional about reaching out to this individual. Hey, you came on board last month. I'm sorry I didn't get a chance to talk to you. This is who I am. Tell me about yourself. So trying to keep that connection to maintain.
Just the idea that you're even thinking about that is what sets that culture up. Like I remember coming into Fundex and there was maybe 15 people or something like that. And I was like, guys, it's great we want to scale and all like that. I don't know how we maintain this culture as you scale because it's so tight knit. It's almost like the whole company can get together and talk about every deal. It's like,
right.
We got to 45 employees or so probably. And we did maintain culture, which I thought was incredible. So I have no doubt that you'll be able to do it because it just comes from the top. You set it. There's ways to do it. It's just different, right? To get to this level, then to this level, you're now in a place where you're going to be at 100 employees before you know it.
Right. But you have to be intentional. You have to still do things like occasionally I'll take an underwriter out to dinner just to buy him a nice meal and catch up. And what are his pain points? You're probably not going to believe this, but a month or so ago, our Dallas-based closing team, I grabbed all the ladies and we went over to, it's a bank customer that has a karaoke business. And we went over and karaoke. I karaoke, believe it or not.
What song did you do?
Oh, I came out strong with a little Texas, Jerry Jeff Walker, Up Against the Wall, Redneck Mother.
Trying to put everyone to sleep.
Yeah.
Okay.
And then
no one probably knew that song.
Burning Love. They challenged me.
You got it. So you don't want to go to do the crowd favorites at all.
No. They challenged me to Burning Love, Elvis, to see if I would actually shake my hips, and I let it loose.
You didn't want to do Fireworks by Katy Perry.
I'm not a Katy Perry guy. So
you didn't want to do anything catchy or on the radio.
No.
1950s.
Yeah. I'm a little bit. Someone called me seasoned earlier today.
Seasoned. That's a good way to say it.
Or vintage. It was vintage. You're vintage.
That's even better.
Yeah.
Now it's fancy. Now you can charge more for it.
Right.
What about the macro? What about the external? We're talking about risks or threats.
So obviously the economic environment, the tariffs threw a lot of uncertainty into the market. It'll be interesting to see how that all plays out.
Interesting is one word.
Yes, and I'm not any a genius around that. I mean, I see the arguments for kind of shocking the world a little bit about raising tariffs, but also the other side of it is you can do things just to be stupid, lack of a better term, or you can make emotional decisions, and that might have been a little bit of an emotional decision to just raise the tariffs that quickly and that severely. So, my experience over my career has been, if you make an emotional decision, it's probably a bad decision. So
100%.
So it'll be interesting to see how all that plays out.
It's basically now it's like China and then everyone else. And the whole point of this is really based in, the SBA has been saying blue collar boom, onshore manufacturing, that's the priority. There's other things too. We don't have to get into all the politics part, but from the SBA perspective, I just think it's interesting that manufacturing, number one priority for SBA based on that memo that Kelly Loeffler put out. And they changed the Office of International Trade to the Office of Manufacturing and Trade, which was a symbolic move. But now what are the policy things that are going to be coming down the pike to make us, I guess, help facilitate the blue collar boom? Because 99% of manufacturing is small business. So do you know of any ways where, like, from a policy standpoint with SBA that we could actually implement to help actually, the administration do what they're trying to accomplish to do?
I mean, the first thing I thought of and the easiest thing is just the guarantee.
90%.
90%.
So switch it from ITL to if you manufacture here in the United States.
Just go 90%.
With you there.
Yeah, I mean, it's just, look, manufacturing is critical. I was reading last week, I think we've lost 5 million jobs over the last 10 years.
It's like 90,000 businesses.
Yeah. And I get it. It makes sense let's bring manufacturing back to the U.S. So bring those jobs back, bring that investment back, bring those companies back.
Reverse that trend.
Reverse that trend. But that doesn't happen over 12 to 24 months, right?
It's like 5 to 10 years.
Yeah,
plus.
I mean, you're talking 5 to 10 years. So for the lenders, and for small business owners, provide that 90% guarantee. And I think that would drive a lot of investment back into the U.S.
Well, not only that, but like in the meantime, the sticks that they're using, which are the tariffs, to help force this, hey, it's way too expensive to do that now, let's bring it here. Well, in the meantime, a lot of businesses are being impacted. So how do you stop the bleed of the businesses that are being impacted as a result of, like, tariffs, for example?
There's so much to unwind there. unpack. It's a hard one. Again, it's a long process to reverse all that. I mean, I still think we're going to have this trade imbalance for many years, and it's going to impact the small business owner in a negative way. But we just have to. It's like starting a shop. I know it's a much smaller scale than talking about international trade, but just find 3 to 5 things that you want to invest in, small things. Don't go for the home run, but like the 90% guarantee. There's probably some other incentives. Maybe there's some tax incentives for those
Tax
small.
is a big one.
Tax.
Accelerated depreciation.
Right. And
things like
so
that.
make some small commitments there and just start reversing the trend. But we're going to have a trade imbalance for a while.
And that's okay to a certain extent. I mean, I guess it's not to President Trump, right? And
Right.
He's been on that, but like there are some things that we're just never going to make here again. And
Right.
I guess you have to on the stuff that is necessary for your civilization to live. And from a national security standpoint, there's things that you need like chips and rare earth minerals and things like that.
True.
But I just never know, because I just like come to a conference, SB is like, oh yeah, we have 504 green now. If you buy solar panels, you can have unlimited 504 loans. I never connected that is actually like, I'm just going to assume that was created when Democrats were in power, right?
Right.
Because that was probably so now it's the opposite. So I would assume we could do things like that for then if you manufacture in the United States, get a bigger loan, get more loans, right? Wouldn't stuff like that make sense? And that could be exciting for us.
And that's, you bring up another thing. It's just the $5 million loan cap. When was that set? 25 years ago?
2010.
2010. Okay. So 15 years.
If
But
you right size for inflation, it should be 7.5.
Right. Yeah. So there's a couple quick things the SBA could do.
That's one that needs to happen.
Right.
Hopefully it will. I think
Yeah.
there's support for that one.
Right.
It's been great catching up with you.
Yeah.
It's been fun. We should do this more often.
No, I
I don't
appreciate
think we
it.
talked since you quit. I'm just kidding. We did.
We did. But yeah. But not like this. Yeah.
Yeah. I mean, no, it was good. Hey, I wish you luck with all the exciting stuff you have going on at Veritex. I'll be watching.
Been exciting.
Are you trying to get to the top 10?
There's been some discussion inside the bank, which is completely different than 2.5 years ago. When I came on board, just kind of let's right size. There were some issues before I came on board. Right size the ship. Let's go national. We want to go outside of Texas. Maybe 125 million a year run rate, and we'll be happy. But you start building this thing, and you start building relationships with other parts of the bank, and of course, it's a profitable business if you do it right. And so the executive management has constantly like,
We've
okay,
heard this story before.
let's do a little bit more. You talked about a challenge. I mean, one challenge would be, there's been a lot of growth. So when, not if, SBA lending is higher risk, that's why you have the guarantee. When we have some loans that go into liquidation, how does executive management react? That's probably the same story with a lot of banks. How do they react? But everything I'm hearing so far is we know we're going to have some loss, but just keep building this group because it's strategic to the bank. It's strategic in terms of earnings. It's strategic in bringing new clients into the bank, which brings more deposits. So I'm just excited where we're going.
That's the right type of mentality.
Yeah.
Emily, do you have any questions that we want to ask Kirk before we wrap up? Hold on, why don't you come here and ask?
Hi, Kirk.
Hi, Emily.
My first question is, do you miss working with me?
Absolutely.
What was the favorite part about working with me?
You know what I loved about you? Well, there's a couple things.
Emily, this is not how you do an interview. It's about the guest.
Give me 2 minutes.
You're passionate about anything you do. Do you like golf?
Yeah.
You love dogs. We have a dog.
Nothing SBA related.
No, it doesn't have to be SBA. A lot of what we do is about, liking the people you work with.
Yeah.
You were always transparent.
Mm-hmm.
I mean, sometimes too transparent, but it's all good.
I haven't been fired
No,
ever, folks,
no,
okay?
that is a good thing because I would much rather someone be completely blunt
Yeah.
as opposed to, was there a hidden message in that comment? So yeah, you were always very transparent.
I will say, because I've talked to you about this before. We started FSG. We kind of talked about. I got hired in 2018. We didn't even have a license. We didn't know what we were really doing. Fundex was trying to figure it out. And then when they said, we're bringing on the Carolina team, and I'm like, who? And then when you guys got there, there was like this sense of relief through every bone in everyone's body that you guys were the right crew to be there. You were the glue we didn't even know that we needed. We were like we were held together with Band-Aids and a little bit of tape, and you guys were like, we got the glue, we're here. And it was sad to see it sort of, break and kind of fall apart like it did. But I'm really happy that our paths crossed, and I'm glad that you were the educators behind 99% of the things that we did. I got to give you and Heidi all of the credit there. I was going to ask you what was your most memorable experience working with our group at FSG?
It just came to mind. PPP.
Oh,
Even though it was so darn painful, watching a group of individuals just roll up their sleeves and just work.
we were working with bourbon and wine and doing loans till midnight, 1 a.m. And then we'd be back on that computer at 6 a.m. We were like, because you guys were remote and we were all in the office. But you were literally like, we became the most close knit group I've ever seen. And we got right through those technology differences that some other people experience. But how was meeting? I'm going to switch gears here. How was meeting Scotty Scheffler?
Amazing. Scotty is he is the most down to earth. I mean, here's the number one golfer in the world.
That means nothing to Ray, but it means everything to us.
Who could be the most arrogant person in the world. And he is the most down to earth, easygoing, almost, I consider myself pretty shy. He's shyer than me. Trying to get a word out of him. But he's just a very humble guy.
So you were really extroverted around Scotty? Is that what it says?
Yes, I was an extrovert around Scott. It's not me. It's not me.
I will say, folks, he claims to be an introvert, but when you get this man talking, you have to like back away because he will just talk your ear off for 4 hours. All right. Thank you for joining the Art of SBA Lending podcast. We will see you next time. Ta-ta.
All right, that's it for this week's episode. If you want more SBA content, you can sign up for our monthly newsletter and check out our sister shows, SBA Today and The BDO Show. We'll leave a link in the show notes. And don't forget to subscribe to this podcast so you never miss an episode of The Art of SBA Lending. Ta-ta.